Welcome to the Passive Mobile Home Park Investing Podcast with your host, Andrew Keel. This is the podcast where you can get the education you need to invest 100% passively in the highly profitable niche of mobile home parks.
Welcome to the Passive Mobile Home Park Investing Podcast. This is your host, Andrew Keel. And today we have an amazing guest in Mr. Sam Sells of Wild Mountain Capital. Before we dive in, I want to ask you a real quick favor. Would you mind taking an extra 30 seconds and heading over to iTunes to rate this podcast with 5 stars? It helps us get more listeners and means the absolute world to me. So thanks for making my day with that 5-star review of the show. All right, let's dive in. Sam is a retired U.S. Air Force officer and combat veteran who founded Wild Mountain Holdings in 2018 with his hero dad. The Wild Mountain team has individually owned, invested in, developed, or rehabbed 75 single and multifamily projects and have 60 plus years of commercial and residential real estate experience. Since 2019, the team has syndicated 20 development rehab properties, creating equity growth nearly 2x initial investment in less than 2 years. Projects include mobile home communities, our favorite, apartment complexes, and self-storage facilities. Sam, welcome to the show.
Hey, wonderful. Thank you for inviting me. And Andrew, and I'm so happy to join.
Yeah, man. I think some people may see the title to this episode and be like, oh my goodness, is this Sam Zell? Is this the man, the myth, the legend? So don't be surprised if some of our listeners are looking for a different Sam.
Yeah, no worries. I wish I could say I knew him, but I've certainly read his book and I've taken some inspiration from things that he's done. But yes.
Definitely. Yeah. Am I being too subtle? I love that. Sam, maybe you can start out by telling us your story and how you ultimately got into manufactured housing.
Yeah. So back in the early 2000s, I was, had done construction for several years, knew I wanted to go into real estate investing, just, it was where I wanted to go, but I decided to go ahead and join the military first and became a firefighter for the Air Force, stationed overseas in Germany. So it was hard to start real estate. I came back and was at stateside and with a friend of mine, we just started flipping homes and we did 3 or 4 together and I deployed and I kept helping them with what I could while I was deployed. And then I started, financing, funding and putting together kind of the deal and then having a good friend of mine and brother-in-law do all the construction work down in San Antonio. So we were buying and flipping homes in San Antonio. And I was doing stuff with my friend up in Idaho where I was stationed at the time. And it was just great. So early 2000s, doing the single, flips. But I was doing 2 or 3 at a time and thought, this is pretty good. I like the returns. The crash happened. At that time, a little hiccup in the real estate world. And, it was good. We were still buying at such a low rate that we were just fine. So we converted those into long-term holds, and I held a lot of that real estate for, well over a decade or so before finally disposing of those assets. But I continued to do that while I was in the military. Just kept staying in. Became an officer, and then spent the last 10, 12 years of my career doing global health. So really, I got my master's degree in health administration and policy and focused on global health and traveled all over Europe, Africa, Asia, working with foreign militaries, helping them develop healthcare systems, was responsible for building like 10 or 12 200-bed facilities, 100-bed facilities in West Africa, helped do stuff in Sub-Saharan Africa. I will tell you, the development process out there is much different than it is in the States. You don't have to go get all these permits and everything else. We would just go to the ambassador and work with the president of the country and say, all right, President, sort of like Johnson at the time where we were at, this is what we want to do. What does your staff think? And we would come back and then I'd go out and, to the locals and negotiate a location. And, we would clear the area with, machetes and then start to, get these 56-year-old bulldozers with people hanging on the side, not a hard hat, or other thing that anywhere to see, but, and we would just start building. And we'd go through the schematics with engineers and look for source local materials and so forth. So quite a different aspect. And then at the very end of doing all that, my military career, I was like, I know I'm getting out soon. And, I always hear stuff like this and I think this is impossible, but I had $30,000 saved up in my 401k. My dad had a little bit of money, and when I say a little bit, like he had $80,000 in his 401k. So very little bit. And we're like, well, we need to go into multifamily investing. And at the time I was the project leader for this $64 million rehab on a 500 bed facility, the largest contingency hospital and the U.S. contingency hospital in the world. So wartime hospital, and just dramatically, working on this thing. I was traveling. I think I went to Korea 5 times that year. We were just going all the time. Plus I was doing my daytime job. And then at night, sleeping like 3 or 4 hours and just working, putting together these, analysis. And my dad and I decided we bought a 3-plex, 3 mobile homes. Only time I've ever seen a double-decker mobile home. We could talk about that in a different story. But, we picked mobile homes because the cash on cash was just so much higher than anywhere else we could get after. And the barriers to entry were lower. And so I'd watched, listened to the podcast. I watched the YouTube video and where the guy talked about his favorite thing to do was to do these master leases. So I called this guy. We had spent 70 grand of our collective 110 on the first place and got that owner finance. And then my dad had just a little bit of money left, and I had no money left because I just cashed out my 401k. And we convinced these guys to sell it to us, even though they had full cash offers, and we had no money. I didn't know where I was going to come up with 50 grand. And then we settled on $100,000 on a master lease with 50,000 going towards the property and 50,000 going into the asset itself to rehab it. And so I refinanced the car. I pulled money out of my credit card. I did all those things you should not do. But between myself and my dad, we came up with $100,000. We closed on this 42 unit mobile home park that was only making $6,000 a month. And then my dad went out there and he just went to work. And that year we pulled out, in the next 8 months, we pulled out $130,000 into our pockets.
Wow, that's amazing.
So just amazing return. And we thought, this is it.
There's something to this, right?
There's something to this. Yeah.
Well, first off, thank you for your service. I mean, I have the utmost respect. Do you know Charles D. Hart?
I don't.
No. Well, he was another serviceman, and he tells a story how, it would be 2 a.m. and he'd have this radio phone that he's like pulling the antenna out and he's like trying to call back because he was doing deals in the US. And, just the utmost respect for you guys. That had to be difficult. And, for you guys to still be able to do deals, that's pretty awesome. Maybe go back and tell us about 2008. I know a lot of home flippers that got in a lot of trouble back during that time. And you said you turned them into long-term holds, into rentals, and you did pretty well. Tell us about that, because I mean, I think that's rare for a lot of the investors that were active during that time.
So we targeted assets that, we would just go door to door and knock, and say, hey, we can do full cash offer, which we couldn't do, or we would love to buy your home. Could you sell it to us? And this was in downtown San Antonio. So small little homes. And we were picking them up for 50 grand or 60 grand. And I had a mortgage broker at the time. I'd give him a ring and say, hey, I found another property. And back then lending was easy, just super easy. And so it's like, okay, what do you want? Yeah, sure, I can get that for you. And then, next thing you know, I'm buying 2 houses, and I'm a E3, E4 in the military, has no business buying anything because my income is like $1,500 a month or something ridiculous, $2,000 a month. I don't know. It was terrible. But somehow, back then you could just buy stuff. It was, you didn't have to show proof of funds. You just bought it. And so sure. We were doing these different, things back then to cut down our closing costs and you could do like 95% loans and then do like a carpet allowance and so forth. And you could really do these no money down loans with the banks, but you can't really do that with the banks anymore. But there are still ways to do no money down loans. We closed on a $15 million apartment complex with none of our own cash in the deal, which was pretty amazing. I could tell that story a different time, but there's, if you're art creative and you understand the rules and the laws, you can do that. So we were good. And so what happened at 2008 was like contracts that we had for sale just vanished. People wouldn't show up to the closing table. So we had these assets that didn't get sold, and we couldn't sell them because nobody could get access to loans, And so fortunately, we bought at 50, we put 20 grand into it. We were selling for 130. It wasn't too difficult to do owner financing for people, which is just a different way to say I rent with a down payment, because a lot of those people who owner finance at some point, they just want to leave, and you can be a good landlord and say, okay, I'll take the property back, and I'm not going to, thank you for letting me know, and we're going to put it back on the market. You can't really do lease options in Texas very well. So owner finance is the same kind of thing, or rent to owns in Texas very well because of the rules and regulations. But
gotcha. So long story short, it worked out for you guys, and that's fantastic. The loan broker you had must have really set you up, and I think the type of houses you were going after, that affordable housing type of spot, always had a need. So that's very interesting. So tell me this, Sam, what has been the toughest hurdle for you in the mobile home park business?
For us in the mobile home park business, has been sourcing debt. Good debt. And we have found that certain states, it's much easier to source debt for a mobile home park, and of course, location. So if your mobile home park, say we have one in Lubbock, Texas, easy, no problem. One that was in Lampasas, Texas, near Killeen, right next door to Killeen, Texas, no problem. We were able to source debt at 4%, and they're half full. And, that gives us the equity we needed to continue to do some development and so forth. But if you're talking about a park in rural Arkansas, even though the demand is there, it's affordable housing, you can buy a mobile home park just about anywhere in the U.S. and fill it up. At least that's been our experience. Small towns, people need housing, and they'll move into that. The rate of return may be a little bit different. But when you're going to a lender, lenders really like markets. And so then you're doing owner finance or other things. And if you don't have a good exit plan with your owner finance, or if your owner finance terms are really ugly, you can find yourself in trouble.
So tell me, what type of markets? I know you're from San Antonio, right? What type of markets are you guys buying in? And when you look at a market, what's important? If you're going into some of those smaller towns, I agree, smaller parks and smaller towns, can get by. But what is a deal that works and what doesn't work?
Our first year, we bought 10 properties, 10 mobile home parks, which are 9 mobile home parks in a storage lot, let's say. We were just buying stuff anywhere, and you can, and we sourced some that turned out to be good little places off the beaten trail, but they stay rented. And
are these around San Antonio? Are these like in Arkansas and just spread out around the Southwest?
Yeah, we have them in 6 states.
Okay.
Because we were going after, where we could enter, where we could buy a mobile home park for, $500,000 or something, and have, 50, 60, 75 units or 75 lots. And so we have properties in Alaska. We have a mobile home park there. We have Oklahoma, Texas, Arkansas, Missouri, and Tennessee.
Very cool. Wow. Alaska, of all places. How did that happen?
It was my last duty station. And so you always want to go with where you know. And we found this little, 3-unit place, the double decker. But that thing makes us like $2,700 a month. Our bills altogether about $750 a month. So we cleared $2,000 a month on that place. It's just like.
And you said it's three mobile homes. So it's a small park, just 3 mobile homes.
That's it. No expansion capability. The city won't allow it, but it's already there. So these three homes, we keep them clean and nice, and they rent out for $900 to $1,100 a month each.
And are those park owned homes? And maybe I should ask you that, what's your guys' thought on park owned homes versus tenant owned homes?
It really depends on your model. If you have the staff or the teammates who can go and do the work, and then park-owned homes will make more money all day long because you can rent them. So, for example, we bought a tenant-owned home for $750 once, right? Tenant said we were idiots because he paid $600 and he just made $150. So we said, okay, thank you. We're not going to argue with you. We're really dumb. I'm sorry. And then, he moved out and we rented it out for, $600 a month. And so we made our money back in a month and a quarter. And then the rest of it was just cash flow. So, if you're going to hold on to those things will last for 40 years. You have control of that asset, right? You can clean it up. If it's a tenant messes it up, you can do insurance on it for $15 or $10 a month. And if you own the homes and you want to get rid of them and bring in nice new homes, you own the asset. Now, if they're all park owned or they're all tenant owned homes, then you're going to have to go through some kind of eviction process to evict, a 1950s mobile home that hasn't ever been cleaned since the early 1950s. And it's got pigs running around outside and snakes that live underneath it and 16 dogs that are inside. And if you buy that park and you buy that home, or you don't own that home, it's difficult to get them off. So I would say when you first buy a park, it's great to have park-owned homes. And then if you don't want those ugly homes, sell them to somebody else and move them away. Make some return off of that and then bring in nice brand new homes.
Yeah, with our model, we like the tenant-owned home model. So I can see, in some markets where, like, we just bought a property in Bismarck, North Dakota, and a 3-bedroom rents out, just straight rental for like $1,250 a month. So I can see where that makes sense. But like you said earlier, it really depends on the staff and the operation that you have. Personally, I prefer tenant-owned homes, easier to scale, to get, volume, over a couple thousand lots. You're gonna want tenant-owned homes. But I think there's some people out there. I know we had Todd Sullinger on the podcast, and he likes the park-owned home model as well. So I always like to ask just to kind of get the baseline kind of knowledge of that. So how do you
definitely
manage
more work?
Definitely more work.
Yeah,
definitely more work for sure. And I think that the big problem, especially right now, that we've seen, just because we get some of the homes back and then we have to like fix them up and then resell them, is that with the supply shortages, and people forget that mobile homes don't have the same materials that a single family house has. The drywall's a different size, the doors are different sizes, the windows are special. So everything is more expensive, especially right now because of the logistics costs. You're going to have to order these windows and doors from, Colorado or from wherever, and to get them transported is what's really expensive right now. So that's why the park-owned home model, to me, you can't just go to Home Depot and replace the window. No, you're going to have to special order this stuff, and it's expensive. So
it is. And you're like, why am I paying extra for this thing? But it's because it's not mass produced. And
exactly,
it's just, yeah.
And the faucets, everything's different. But so tell me about your management, Sam. Do you guys have your own management company, or do you use a third party to manage these?
Yeah. So we tried to do third party in the beginning, and that didn't really work out. So we ended up building our own property management company, who now has, 30 employees or so. Which is really just park managers across the machine, plus maintenance folks and, so forth. The actual staff in our office, we have 3 people in the office who are able to handle that load. But,
that's a common theme, where we tried third party, didn't go as planned, had to build it out. And from experience, I know that's it's easier said than done. To build out that infrastructure is quite tough.
It is quite tough, particularly when you're in multiple states. And so you also don't get if you're in multiple states, you can't operate a property management company outside of your own property. And so you have to own what you're renting so that you can, fall under the correct rules. You're not breaking stuff. And then if not, you need to get a broker in that state. who's a licensed, and then you can branch out from managing your own property to managing other people's properties. I mean, we've done that in some states. We have 3 states now with brokers licenses and their own property management companies inside of that state. And we're scaling in that way, but that's a long road and difficult road if you want to go down it.
It is. Yeah. We explored last year managing for other people, and we just decided it's not worth it. It's too much work to do that.
It's a ton of work, and there's not a ton of money. You're not going to get rich from property management.
No. Yeah, definitely not.
Ownership, equity, that's where you get.
For sure.
That's where you make your money.
Tell me this, Sam, what are the most important things passive investors, we're talking limited partners here, what do they need to look out for when investing into mobile home parks?
We've learned quite a few things. And one of the things that we've learned is that mobile home parks really kind of attract the best of us and the worst of us. They attract investors like yourself, Andrew, who want to make a difference, who want to target affordable housing, want to create clean, safe places for people to live, change communities. The poor will have with us always, right? So we want to make a difference. And so if you're going to invest with somebody, and you should, particularly at the beginning, I recommend partnering before trying to start your own thing. Work with somebody else. Be a co-GP, be an employee somewhere where you're going to learn the intricacies of this stuff before you go suffer all the brain damage that I did. And I'm sure you suffered a lot of brain damage as well in the beginning. You want to invest with people who their mindset's right, their team is right, and understand that things are going to go wrong, particularly in mobile home parks, right? Some guy's walking around in the back with a crossbow on his back and a machete in his hand. And you're like, what in the world is happening right now, right? And so, somebody's got to go solve that, and they can't just freak out and, I'm leaving. And if you, as an investor, if you want to be all engaged, you need to understand that these are not pretty assets. We're going to create them and make them into pretty assets, but it's going to be a bumpy ride to get there. So invest with a team that can handle that. Even if you don't want to handle that, that's why we're passive investors. It's because we don't want to handle all that stuff. But invest with a team who's confident and can get after it. There's a lot of people who are unscrupulous in mobile home parks because they know they can take advantage of people. They will not invest a single penny into that property. And we like to buy properties from them because it turns out to be a great deal for us. But, just really think about who, do your own due diligence with your operator and determine who they are as human beings and if they're the right type of human beings. If you don't care and all you want is money, then, just see if they have a good track record.
Yeah, no, I agree, because there's people that go in and milk these things for every penny and don't reinvest in them. And like you said earlier, we like to buy from those people because they're leaving money on the table. That's one of the big things I believe is that there's a win-win here, because when we improve these properties and put money into them, we get better financing. Fannie Mae doesn't loan on just any property. No, there needs to be off-street parking. There's requirements that they have that they want to see. So I think it's taking the higher road is much better long-term for both the investors and for the tenants and for everybody involved. So I agree with you there. Sam, Absolutely. What's the perfect mobile home park look like in your eyes and why?
I guess it depends what you're talking about. If you're talking about from an acquisition, it's ugly. You drive in, it looks like a tornado went through there, but there was no tornado. And you have some good 1990s, 2000s assets, but it's just not really well managed. The infrastructure is there or can be there without too much difficulty. And it's a mom and pop owned that they just ran out of cash, right? Or some operators take them, get them from super, super ugly into decent, and then they run out of cash and they need to sell it. And you come in with new cash and take it to the next step and the next level. So there's different entry points. Now, from an operational standpoint, the perfect mobile home park looks like, 75, 50, 75, 100 lots or more, 95% full, homes clean, pads are nice, good yards, playground, all those things where people can have just a great community and love to live there.
Awesome. Yeah, I always like to see where operators take that question. And a lot of them, you'd be surprised, a lot of them start with, that fixer-upper, right? Like whatever the park needs to look like to get the investors a good return. That's the perfect mobile home park. And others are like, oh, we want 100 lots, private utilities, 95% full, the less value add, but more of the kind of stable asset. So interesting. Let me ask you this, Sam, what mistakes have you made? Or maybe you could just share one or two with us of, lessons that could save the next operator.
Yes, I think I've made all the mistakes. So number one, partner with somebody in the beginning if you can, or start small. You can buy a single park, and that second park that we did, and we made a lot of money off of that property, and the community was doing well and was cleaned up. We stopped and thought, do we want to stop here or do we want to grow? Because now my dad and I are making enough money that he could retire and I could retire and we would be just fine, but we decided to grow. And then if you want to grow and you want to build something really larger than yourself and your team or your family, it's going to take a dramatic amount of work and long days, long hours. I would partner with people who can help, join a mastermind or other group, listen to podcasts like yours, Andrew, and learn every minute of every day that you can. Because there's folks like myself and like you who've made tons and tons of mistakes and are happy to tell you, don't do that. Don't partner with a dentist who thinks everything wrong is a cavity that's got to be rooted out, and drilled and it's terrible. And the sky is ending because the previous owner buried a septic tank in the back somewhere. Right. And you didn't find out during your due diligence. Like, well, I don't dig holes in my due diligence, but we found this. It's let's just deal with it and we'll move on. And then, they're going to say, you're a liar because you said the park was good. And you're like, it is good. But, there's, sorry, it's sharing past transgressions, I guess. But, we learn from these mistakes and we're happy to help others avoid them. Partnering with the right people is a huge thing. Don't have people invest passively unless you're going to follow the Security and Exchange Commission rules and regulations. Don't go to jail. Make it better than where you found it, and hire competent legal advice.
I think that's really good advice. That was very powerful. That was the episode golden nuggets right there. Sam, what's the value proposition at Wild Mountain Capital and what makes you guys different?
A few different things. We are always happy to partner with others. We love helping grow new companies, and we've done that a number of times. Help people go from $200,000 assets, and now we're buying a couple $1 million assets and helping them learn how to structure that and do that and what their role is and so forth. Always happy to do that. Our focus really is, that comes back from my days of being global health security, health security really is going around and looking at communities and trying to figure out how do we improve the health conditions here. So looking at that, you have housing security, you have food security, you have health security. Where can we make a difference? Well, mobile home parks is really a right place in America to come in and create housing security. Where else can somebody get a 1,500 square foot home or 1,200 square foot home, for $400 a month, really, plus lot rent? Nowhere. You just can't get it. If you can go live in an apartment for $800 a month, but it's not going to be 1,200 square feet with 3 bedrooms and have a yard, and you can have your dogs. You can park your 3 cars there, one that works, and you can do all sorts of different things, right? You can't do that anywhere else in America. And so we really focus on building, communities, changing lives, and then growing wealth. And we believe that if you do the work on the ground level, create value that residents are ready to pay for and are willing to pay for, then the wealth comes. And we've seen that, and I'm sure you've seen that as well. but it's at the bottom level. That's where it's at.
Definitely. Tell us about your portfolio. I mean, I know you have one park in Alaska that's 3 lots, and maybe tell us a little bit about, some of your bigger assets and kind of what your average pad size is or average lot number is.
So right now we have a very mixed portfolio where to scale, we've gotten into apartment complexes, and we're buying 200 unit plus size apartment complexes. We did buy an RV park, totally vacant. Well, two people on the RV park in a town in Texas. We bought that a couple months ago, and turning that thing around. But we typically look for 50 lots or more, or at least capacity to improve. We do want to get to 100. Like you understand, when you're scaling, there's a beautiful point where property management takes care of itself. And it's really, 100 lots or more where there's enough revenues there to pay for a good staff. It's hard to operate a place that is 50 units and below, unless you just really luck out with a good property manager. And that for us is usually a woman who can go up and tell people that she's, going to kick them out unless they pay the rent. And do it in a nice way that they feel appreciated and valued. And when a guy goes up and knocks on the door and says, "I'm going to kick you out unless you pay rent," people get really mad. And so we've learned some things about property management. And, there's property manager types that we look for who have that capacity. And it's easier, much, much easier on larger properties.
Definitely. How can listeners get a hold of you, Sam?
They can reach out to me anytime at sam@wildmountaincapital.com. Wild Mountain was a road I lived on in Alaska. And when you're coming up with a team name, it's pretty difficult, challenging. And so my wife was like, "Hey, we live on Wild Mountain Drive. Let's just name it Wild Mountain." I was like, "That's pretty cool because we're crazy. We're just, forging a path up the mountain and bringing along everyone who wants to come with us." So happy to talk to anyone about mobile home park investing. We do a lot of apartments now. Happy to talk to them about that. The differences, trade-offs, dollar per dollar, mobile home parks, you're going to make more money every day and make more difference. But it's easier to get financing for apartment complexes. So it's, there's, a future for us where we want to try and put together, the capital to help provide loans on mobile home parks and make it easier for folks to do that. But that's the future day. That's not today's day. We're stuck like everyone else, calling and hustling and so forth. We do not have a fund. That would be really nice, but that's where we're at.
Awesome. Well, Sam, thank you so much for coming on the show and adding value to the listeners. That's it for today, folks. Thank you all so much for tuning in. Would you like to see mobile home park value add projects in progress? If so, follow us on Instagram at Passive MHP Investing for photos and awesome videos from our recent mobile home park acquisitions. Once again, that's at Passive MHP Investing on Instagram. See you there.